You mentioned in episode 3 about a crash, and we had a question. I won't read all of it, but you've got the idea. So just ask you, as an economist, what factors are there that will, bring a crash in the coming years that you predict? Now, once again, obviously, this is your opinion.
Yes, absolutely. Yes.
So we've got to, and the audience got to take what you say with a pinch of knowingness and an opinion.
Yes.
What would your answer be to?
Okay. First and foremost, let me just say that I called the last 2 boom and bust to the month.
That
which goes back to the last 20 odd years.
Yeah.
The last bust that we had, the real bust that we had, was in 2007/2008, and I predicted it to be around July 2007, the height of the market. It happened to be August 2007, and then after that, everything started going south. And I predicted that around 2009/10, around 2010, we're going to come out of, and we're going to have another boom. It was 2010/11. So almost, by a few months, I called it. And I also believe that there is a mini boom coming, which is temporary boom coming, but it will last for the next 2 or 3 years. And after that, we will have a plateau at the top and a downturn. Reasons. He wanted to know the reasons. Mm-hmm. Okay, fine. There are about 3 or 4 reasons as to why I believe that. Number one is the borrowing. Now we've been borrowing, and with the new Labour that came in, all of a sudden they're going to borrow even more. Borrowing causes inflation across the pond. Also, with the new Trump administration coming in, they're going to be borrowing. So inflation is one of the key factors. All right, but not the only factor, but one of the key factors. Secondly, deregulation causes a temporary boom, but at the same time, after the boom becomes the bust. Now, there is a deregulation in the financial system that is coming, and when it happens across the pond, it happens here, it happens across the world, and I will come back to that as well. And the third, which is very close to my heart, is cycles. Now, a lot of people go, well, hold on, cycles doesn't always work. I can tell you, cycles always work. I am heavily involved in stock market. I'm heavily involved in property trading. And I can tell you that nothing goes up forever and nothing goes down forever, as I mentioned earlier on. So when it comes to stocks, it will go up, the trend goes up, and then it will come back down slightly, and it will go up until it gets to a point that it cannot go any higher, because supply and demand. And when it goes to a certain point that there is no more demand for it and there's a lot of supply, it will come back down. So put them 3 together, couple all them 3 together, you've got high inflation and remember, earlier on we spoke about the banks are putting their rates up because they are anticipating inflation to creep in a few years' time. Secondly, deregulation as well causes the biggest borrowing and lending. So if there is no regulation in place like they have done so far, it's easier to borrow money. When you borrow money, you as a general public starts borrowing money for whatever reason, it gets to a point that they can't pay back. The moment interest rate goes higher, 1 or 2% higher than what it is, they'll be stuck. So what happens then? Of course, supply and demand again. They can't service their debt. And of course, then the cycle kicks in as well. Put them all together, we've got a recipe for a downturn. Downturn does not last as long as the upturn. The upturn will go a lot longer than a downturn, but downturns are sharper. Where, for instance, if an upturn is, let's talk about property market. If the upturn is, on average, 5% increase in property prices, and sometimes it's 7 or 8%, 10%, and then other times 2 or 3%, on average is 5% over say 18-year period or 20-year period, when the downturn comes over a 3-year period, all of a sudden you will see 25, 30, 35, 40% downturn, and then it picks up. Now, what happens is because for the last 18 years, instead of being 5% or 6%, if you look at it, all of a sudden we've had past 3 or 4 or 5 years, instead of being 4 lots of 5%, we've had 4 lots of 10% or 5% and a 15%. It's out of kilt. It has to come back down for that mean average of 5%. And that's what we have the downturn. Whether it's a stock market, whether it's a property market, whatever it may be, that's what happens. It will come back to have to meet its mean average, which is 5% across for a long, long period. Now, the world is connected in every way. I know across the pond, I know they're going, oh, we don't want to have anything to do with the outside world. We it's USA first or UK first, and but it doesn't work that way. No man is an island, no country is an island by itself. They have to interact. So whatever happens, and this is something that general public must realize, that when we go into a recession or a downturn, the world goes into a recession downturn. It's not that one country goes down, another country is booming. It doesn't work that way. We are so connected. When we're like dominoes. When one falls, all fall. When one picks up, all picks up. So that's how it works. Apart from that, I can see, if you asked me what would cause the inflation, what would cause back in 2007, it was the banking system whereby they lend out money for properties and everything else without any checks or anything else, and that's what caused the recession. Then I can see deregulation is the next cause of the downturn, because of the amount of money the government will be borrowing and lending out. That will take inflation up. They have to put interest rates up to fight the inflation. People have borrowed. They have no choice. All of a sudden, they throw the keys in and so forth. Yes.
Okay. So at that time, inflation spikes, like you said. They have to hike up the interest rates to tackle the inflation. By that period, how long do you think? 2, 3, 4 years?
4 years. 3-4 years time.
By 3-4 years time, when everything comes up for renewal, and the interest rate where they did get it for, say, 4%, is now up to, let's say, 10, let's say 11, let's say 12. They can no longer pay that
service their loans. Yes.
Okay, so then that's the point. Just throw the keys in.
Yeah.
And walk away. Then obviously that creates a mass debt, mass no paybacks to the bank.
Of course.
Okay.
Of course. So if I had to put my neck on the chopping board and say, okay, what one factor will cause it? I will say deregulation, which is good in certain areas, but when it comes to the banking system, deregulation is a bad thing, because that's what creates boom and bust. And boom and bust, majority of the time, starts with the banking system. And deregulation in the banking system is the next thing.
I've got 2 questions. 1, is a recession needed?
It always is needed, of course.
Okay.
It's always needed. Why? In order to balance the equilibrium. It must be there, because things, nothing always goes in a happy medium. It either shoots to the upside or it will shoot to the downside. So when we have recession, it shoots to the downside and it has to come back up again and go to. So it's always, it has to find its medium, its average medium, and for that reason, it's supply and demand. Either it's too much supply or too much demand, and that creates the bust and boom.
Yeah. The second question was, is there a way to prevent it? But you just answered that there. I mean, at the moment, everything, they can keep kicking the can down the road.
Yes.
But ultimately, it will
There
will
comes a
fall.
time the government
It
says,
has
you know
to.
what, we can't kick it down.
We can't
Let's
keep
let's
doing that,
just
yeah.
let's just kind of like they've done in the past for the last 300 years. Let's just turn the clocks back to zero again, and we start again. It's going to be a pain for the next 3 or 4 years, 3 years, 2 years, 3 years. Let's take the pain and then we start again. So my opinion is that if you know how the market works, if you know the timing, and if you are keeping a very close eye on everything that is going around within the system, you know when to be in cash and you know when to be in asset. Right now, it's okay to be in asset because the time is not there yet to be in cash. But there will come a time, which I will tell our viewers of my opinion as to when that will be. And it's good to be in cash and wait before we get into assets again. It's very important that to be in cash or assets. But either way, that way, I've avoided personally, I've avoided the recession, twice now because of the timing, and I know the timing that is coming as well. So, but it's not yet. Therefore, I am still in asset.